Do you think your 4% interest rate is helping you win? I'm going to show you how a client paid off their home in 4.3 years versus 30 years. This also will save them $435,000 in interest. We did this all without chasing interest rate. This is the stuff that the industry puts out because they want you to be stuck in a 30-year fixed mortgage, making the bank rich. They're trying to show you how to save $80,000. Let me show you how I save my client over $400,000 on their mortgage. They just want us in debt forever, for 30 years. That's what they want. It's just long-term slavery disguised as a good deal. Your interest rate means absolutely nothing if your structure of your loan sucks. As a lender for almost 20 years, the First Lien HELOC is the best strategy that you can utilize to get yourself out of debt faster, save hundreds of thousands of dollars in interest, and stop playing the rat race game. Here's what we're doing with this client. So he's going to sell his condo. He's going to walk away with about $450,000. We're going to put the minimum of 10% down because he plans to buy another property, his primary residence. I'm going to compare this to a 4% interest rate today, which you can't even find that interest rate. But I know so many of you would fall in love with that rate. His net income is $14,000 a month. We're going to take the excess cash from the sale of the house and we're going to deposit that onto the line of credit. Now remember, the advantage to the First Lien HELOC is that we have a 30-year draw. So that extra $300,000, instead of sinking that into the mortgage where you can't touch it, we're going to put it down as a deposit. So from day one, we will have access to that cash in case he wants to buy another property, if he wants to utilize the money to do any sort of other investments. It keeps him liquid. After he pays all his bills at the end of the month, as we use the HELOC as our checking account, we've got about 47% of our income left over, which is about $6,500. So here's our 4% comparison on a 30-year fixed mortgage. Paid that back over 30 years, assuming you never refinance and never touched your mortgage, you'd pay back $1.2 million, principal and interest. That same $720,000 balance, we're paying that off in 51 months, saving him $435,000 in interest. And remember, we love the fact that I'm modeling this out at 8.3%. But remember, I'm comparing that to a 4% 30-year fixed mortgage. Because the interest calculations are different and we're paying an average daily balance, I'm only paying $82,000 in interest. $82,000 in interest is the equivalent of having an effective APR of 0.7%. And again, in 51 months, our loan's completely paid off. He now has access to $720,000 on that line of credit, which we're going to go buy more real estate with. Or you can stay in your 30-year fixed mortgage at 4%. You would have only paid down $57,000, still owing $662,000 on that mortgage. I seriously don't understand how anybody doubts this program, doubts this strategy, and to think that a lower interest rate is you're better off doing that. The math